Hey everyone, it's Nick with Us versus Herd. Thanks for joining this live stream. We're live, or we post a video every day at 3:30 Central. Appreciate you guys. We actually did a poll on our free options trading group, a couple of videos, and you guys picked this one. I'm still going to do the other one about the American Dream, but in terms of AMD, I know this is hot right now. Kind of before we got in here, someone said the first ever options trade today was on AMD. Mr. Big Time Up and Comer, what's up, man? What's going on, guys? But we're gonna get to it. But yeah, if you haven't joined our free options trading group, the link is below, and it's in the description. I posted all my trades in there today. It was a pretty busy day. We'll get to it here. Zachary, what's up? I've option traded before, but my big gains today were JD puts. Yeah, JD was down big. So was Baba. Kind of show you something here. AMD. So I have a couple accounts here. I trade on Tastyworks. I trade on Thinkorswim. I didn't really trade on Robinhood today. My main brokers are Tastyworks and Thinkorswim. Made over $400 on one account today. I traded on multiple accounts. I think on Thinkorswim today I was like around 300 or so realized gains. But AMD was the main source of the gains today, and then Alibaba was next up there as well. So let me actually minimize that here. But what's on topic today is AMD and whether or not we should be buying the top. You know, before we get into that, and I'm going to give you some examples of price action. People are joining right now, so appreciate everyone that's here. Feel free to ask questions at any time. I will stop, answer questions. Let's have a two-sided dialogue about AMD. But let's go to the yearly chart here. As you can see, to get a recap for people who don't know or haven't been trading AMD, it's gone from $9 up to $29.94 starting today. So in the last year, most of this was in the last 6 months or last 4 months. You know, it went from $9.04 as a low to a high of $29.94. And the reason why it's going up, institutions are bullish right now. You know, they're having earnings are doing well, and their battle with Intel is paying off. You know, they're getting upgraded left and right. Let me move this over, but you know, Bank of America set a price target actually today of $35 from $25. The biggest increase. Kept that going there. And you know, the big question is, people are asking. There's a lot of, I think, in terms of, you know, FOMO and what's going on in the market, this is probably at the top of the list, because people that are trading options, especially who started trading, let's say 19 or 16 or last month, you know, we're hitting triple-digit returns, quadruple-digit returns even. You know, I've seen people get 1,500%, 2,000%, 500%. Like today, I cashed out. I was about 150% on these, and you know, I cashed those out this morning. And let's go to the 15-minute chart actually to kind of show you what's going on here. So $29.94 hit at open. I actually cashed out right at the excuse me. I actually cashed out right at the open. I was actually thinking to myself, like, I was, you know, trying to stick to my rules here. I was up 200% on these, and I'm like, okay, this could really run if this breaks 30, and it didn't break 30. So I actually took the money, because the thing is, you can always put a new position on. You don't need to, you know, wait for your position to get large. You know, you have a better chance of trading it many times versus you know, having one big 1,500 to 1,000% home run. If you did 100% 5 times, you did 200% 5 times, you know, you're at 1,000%, you're at 500%. So, you know, I think with AMD right now, again, this is my own opinion, and this is the way that I traded it today, is you don't want to get greedy, especially way up here. The air is thin, there's no support, and I'll kind of give you some examples here. On this day here at 8:27, it went from 24, let's see here, 24.55, 27.21, and I actually put on a trade. I've actually bought the $30 calls for September. Let me show you this buy here. I actually took a screenshot of this buy. I don't know if you can see it very well, but we can zoom in here. but just to kind of give you an example here. And yes, I made money on here, but this stock is very dangerous. Like, trade with caution. So I bought these at an 827. I bought one at 11 in the morning for 47 cents. And I actually left for the day, and like within an hour, these were already up. This was already up 100%. It was already up 100%. And by the time I came back, it was already down back to break even. So by the time I came back 2 hours later, 2.5 hours later, I bought another one for 48 cents. So I'm like, okay, well, it seems like it wants to get back up there. You know, I'll just average in, and I'll add to my position. But as you can see here to my right, it went from 27. Then we started to scale back here. And actually, right down in here, volatility died down, IV died down. As you can see here, the bottom here, this green bar down here is implied volatility. It was at the 50s, then it went down. And if you don't know what implied volatility does to your option when you're out of the money, it means it decreases in money, even if the pricing stays the same. Look, the pricing pretty much stayed the same here, but this option went from 47 cents, it was down to 7, it went down to 7 cents. Like 2 days ago at 8:31, August 31st, they were worth 7 cents. And then yesterday, we got this massive green bar here. It went up $3-4 yesterday, 11% yesterday. I actually posted that in our options trading group. Went up 13% yesterday, and these calls here were up 666%. Like, it was crazy. Like, they went up 666%. But I was only profitable by a little bit. I think yesterday I was up on the position like $20 or something. Like, today I closed them out for like $300. But I was up only $20 yesterday. So this position went from 47 cents. Nothing happened here. Went down to 7 cents, same position, and then it skyrocketed up yesterday. I went back to break even, but it took me 666% to get back to break even from where I was before. I didn't add to the position. I mean, I wish I added the position, but usually, I add when I believe in the position, but I wasn't really sure what was going to happen here, so I didn't really do it. I still came out a winner because we had a big day today, and the stock went from $29.94, almost 30, all the way down to 27, and these are huge swings. This is 10, 12, 13% swings here on a $20 stock. So there's no support up here. Just be mindful of that. Hey guys, anyone that's joined now, there's a bunch of people in here. Feel free to ask a question or add to this conversation. Anyways, I'm just kind of going through my trades here on what I was thinking and kind of the risks. So should you buy up here? For me, I took this position off. So I don't like to put a position on and then re-enter because it's mostly a losing trade for me. So I'm going to wait for it to either die down back to when it gets when it starts to consolidate, or I guess I'll miss out if it runs up again tomorrow. But there was some big upgrades here. But when you're buying, like for my opinion, when you're buying 52-week highs or when you're buying 52-week lows, something's going to happen. Either we're going to break through the roof or we're just going to drop down. And the key thing is to find areas of support. If we're looking, let me kind of scale this back, but because it's been on a tier, this either has to develop a new area of support or it has to come back to an area of support. It's not going to stay here forever. So it's either going to come back to like the 18s up here, maybe 25 is an area of support, but it's kind of yet to be determined. But as you can see, if you were trading today, like, it wasn't for the faint of heart. We went from $29.84 all the way down to 27, and what you need to be careful of is over trading this, because there's a lot of opportunity here. People get greedy and people think, oh, it's going down, it's finally going to break through, I'm going to add a lot of puts here, I'm just going to start scaling in a lot of puts, it's going down, oh, it's working out, I'll scale in some more, and then it rips back up. It ripped back up $2, and then those puts are in big trouble. And if you're not buying like further out, you're going to be in big trouble here. And as you can see, it ripped back up to $29. It took a couple hours, but really closed pretty much the same. I mean, we were up 40. I mean, it went up almost 2% today, 45 cents, but nothing compared to when it was up to almost $30 or when it was down to $26.80. I mean, things got kind of crazy here, and this is where you can make a lot of mistakes. Trying to time it. Most people are not good at timing the market, including myself. Like you can't time it. I will admit, I timed it pretty good to get out, but I had no idea it was going to drop like that much. I had no idea it was going to go from almost 30 down to 27. If I knew that was the case, I definitely would have cashed out immediately. But in the back of my mind, I was thinking, like, you know, I got a little greedy. I was saying, hey, should I take my gains? Should I not take my gains? And like a chart like this is not very easy to trade. You know, a lot of people that are starting to trade, they're trading charts like this was yesterday. Oops, this is the 15-minute chart. They're trading charts like this yesterday. You know, went up all day long. All you had to do yesterday was buy it and hold it. You know, all you had to do was buy it and hold it. You didn't have to do anything. You know, you made money. And then today, if you didn't already have a position on and you started adding some stuff in here, you know, they made you work for it today, because there's a lot of moments that, hey, this could easily, you know, based on the yearly chart, you know, if it went from $30 down to 27, it could easily go from 27 down to 25 down to 20, 22. You know, you don't know where the bottom's going to fall out. You don't know where there's area support. You don't know where people are going to start buying. So that's why, like, when you're trading, you got to stay very disciplined. You got to understand, you know, where your risks are. Like, you know, people, some people are trading this way too big, and some people are trading, you know, for me, honestly, I'm trading it very small because I honestly don't know which way we're going to go. So I've been trading both sides, puts and calls. You know, I actually had some puts on here. I added the, when it came down into here, the 24s, I actually added the $21, $21 puts. I'll show you here. Let me get Tastyworks back here and let me kind of show you those puts here. So I had these $21 puts here as well. I scrapped for 40 bucks, but my gains outpaced my losses here. So, you know, I was protected. So I definitely did hedge this position. I didn't just go in blind and it's like, okay, I'm going to do all that I can. So I definitely did. I did all that I could to minimize blowback. So if I was going to lose on the calls, I was actually going to try to make some money on the puts. And but I closed out the puts. I got like 12 bucks back. They were still worth the $21 puts for September 21st were still worth 6 cents. So, you know, I got $12 back. It wasn't a full loser, but it was pretty close to a full. But let's get back to the charts here. So, I mean, you got to be careful when you're trading this stuff. If anyone has questions, comment anytime. I mean, we got a bunch of people watching right now. I know this is a very interesting topic, but you know, did anybody make money today? Did anybody lose money today? I was on the receiving side today, you know, but I could have very easily lost. Like if I started scrambling and get worried about my positions, if I didn't sell this position here and I saw it tank down to 27, a lot of people would get very nervous. They would start to make decisions that maybe they would start either adding to the position, adding more calls, which it could work out, but it also could not work out. So you have to understand, the longer that you hold something in the market, you increase your exposure risk. So how much capital are you willing to expose? How much capital are you risking? Are you willing to risk at one time? Is 200% gains not good enough for you? If it's not good enough for you, then you know you got to kind of reevaluate what you're doing here. You know, you can hit it big. Yep, sure. I've missed out on tons of trades that, hey, I took off 100%, 200% that turned into 1,000% winners if I would have held on to them, especially like with a Chipotle trade or any of those like big movers today. You know, like Netflix today, I would have took profits off too early. Like Alibaba, I took profits off too early today. I actually had a strangle on here today. I actually had the 175 calls and the 165 puts, and I sold it. I sold it down in here at like 11:30 or so, and then it cracked below. I did add another position. Yeah, Zachary bought JDs for $3 and sold for 45. Wow, man, how many did you get? Congratulations. You know, the Chinese stocks are really hot right now, but you know, you're not gonna time it perfectly. Like for me, this Alibaba trade today, if it was leveling out here and it went the other direction, like back up, like this way, which a lot of stocks were doing, including AMD, it leveled out and then went back up. The S&Ps today leveled out and went back up. So I'm taking my profits. Yeah, I made 100% profit on it, almost 100%. I made like 90, 95. I almost made 100% profit on it. But it could easily went the other way. Yes, you could say, hey, I missed out on a couple $100. I could have turned this into a $100, 100% winner into a 300 or 400% winner. But you have to understand, you can always put another trade on. You can always, you could always take profits. I mean, and put another trade on. It's easier to move with profits than it is to move with losses, because as you know, anyone that let's say you have a small account, especially you have to be especially careful with a small account, because if you dwindle your account down or you blow it up, it gets harder and harder to put trades on, because trades cost what they cost. You're not going to put on an AMD trade or certain trades, but in terms of Zachary says he only risked 5. He's got a sub 300 account on Robinhood. Well, it doesn't matter what size your account is. Always learn. Always take profits. For a 200% winner, you can't complain. And kind of going into AMD for like the long term, why I didn't put on another position is because these things got super rich today. Because look at the let's go back to implied volatility. Implied volatility was down and it spiked right back up. So the same position, like I bought those for 47 cents. If I were to buy like one standard deviation out, even just like 2 days away, I mean, we're paying a premium up here. I'm paying 50 cents for $1 away. But I was probably going to trade these September 16th or the October. I actually sold some October calls on another account too that hit it pretty big. But let's go to these September ones, 16 days out. For these $30 calls, you're paying $1.27. For the puts, 25, you're paying $25. You're paying 50 cents out. The puts aren't actually that bad because it was spiking up and volatility kind of died down at the end there. But for 15 days out, the 31s are $100. I mean, this is you could definitely sell some premium in here, which I'm not currently, just because I didn't want to re-enter the trade. I want to just sit with my profits, reevaluate, take my time with it. You don't need to rush into a trade just because you made money. Sometimes what happens then is you lose money. But if you look at these calls and puts today, as you can see, out of the money, since IV was so high, if you're looking at out of the money, even near the money here, these 28.50 calls, these $28 puts, I mean, they lost 43%. These lost 3%. These didn't make money. In the money calls made a little bit of money, small gains, if you were to hold all day. So I'm actually really glad I took my profits, because you could have not made that much money. Like these $30 calls on these September ones I had, they were only up 24% after all day. I sold these for $1.83, I believe. Here, let's go into the let's see here. AMD, where are you? AMD sold them, yeah, $1.85. So $1.85, these $30 calls, and then these were only worth the September ones were only worth $1.27. So it would not have paid for me to hold those at all. I made a lot more money cashing out. So premium is rich right now. Definitely is good for selling premium. But when you're buying the top, something's going to happen. It's very hard to make money on stringles when the premium's so high, unless you're selling premium. If you're selling a stringle, maybe. But I didn't see a trade in here based on these prices. You either need IV to go up higher, or you need IV to come down lower. Crypto Slice says FXI was good for him today. Congrats. Congrats all that made some money, FXI. I don't really trade this. Oh, this is China. Yeah. What's the other one? JD. People were trading today. So JD. Yeah, JD bombed hard. But yeah, there's a lot of opportunity there, but you also have to realize when you're getting a good deal. Are you getting a good deal buying premium? Are you getting a good deal selling premium? You have to understand what the pricing is and where you're going to get screwed, because the market wants to find a way to screw you. Oh, the market wants to take your money. The person on the other side of the trade, the people that are selling the contracts to you, or if you're selling the contracts to them, they want to make money like you want to make money. So you have to make sure it's in your best interest when putting on a trade. Know where the pricing stands, know where your risk lays and or lies, and just understand what trade you're putting on when you're putting on. You know, in here, people probably lost a lot of money buying calls, selling puts, and then really they ended up, you know, especially if you're trading really close to expiration, since the, you know, Friday's a couple days out, you would have lost money on these trades. Like I showed you, these were out of the money. These are all losers. You know, out of the money. These are all losers. You actually can't see that here. Let me. Right here. Here you go. These are all losers here. You know, you don't want to be holding the bag on Friday, and these are all losers, and or even today or Thursday. You know, you're down 50% on these 3150s. I mean, this is ridiculous. But these premiums are so rich. These premiums were so rich today that there were a lot of ways for people to suck money out of the market. There were a lot of ways for institutions to make money, the people that were selling those contracts. So be aware, there's two sides: buying a contract, selling a contract, buying a contract, shorting a contract, especially for those newbies. When you buy a contract, someone is selling it to you. So, you know, appreciate the good chat. I don't want to make this video too long. Just want to do a quick video, some of my thoughts on AMD right now. I will continue to trade it, but I'm looking to take a break. I've been making some money in it, so I just wanted to you know, scale back and reevaluate that. Thank you all for joining. If you haven't yet subscribed, hit that subscribe button. You'll get these alerts. We go live almost every day, or we post a video every day at 3:30 p.m. Central. I appreciate everyone that subscribed. The channel is growing quickly, and join our free options trading channel, our group. I post in there every day. I post on my trades. We're getting things popping, so appreciate everyone. Thank you so much for watching.